Well, I see her room. I see her study room.
She was there a little while ago. Congratulations for everyone who's here on time. That's amazing.
Good morning. Good morning, Jenny. I like your hair.
Good morning. Oh, thank you. I didn't plancharlo. I literally just washed it and let it dry. So thank you.
Well, Happy New Year
Hello,
to everyone.
Ivania.
Can't believe it,
¿Cómo
right?
están a todas?
Yes.
Todos. 2024.
Yes.
Happy 2024.
Looking forward to all the blessings that we're going to get this year.
I mean,
Be grateful for our health, our wealth, our happiness, right?
I think internal peace, happiness, balance it's what we can definitely wish for.
Absolutely. But it's a new year, so we have to take a look at it as a new opportunity to build our dreams. It's always every day is a new opportunity. Yes, es una nueva
the past
oportunidad.
Desde que empezamos el año here in the office, we have been implementing the what we learned at the end of last year, which was like just take our goals in 90-day cycles.
Mhm.
So we're really implementing that, and that's the only way that we're going to be able to achieve our goals, si Dios quiere, just keeping a real keen eye at the end of every month and see how we did at the end of the quarter, and then next quarter is another blessing. So every quarter is a new blessing.
And to measure it, otherwise you can't. If for a goal to be successful goal, it has to be measured. So
that's right.
Right, it's great. Well, so happy to have you, Ivania, again.
Thank you.
You're one of our
thank you for being
speakers,
here.
No, thank you all for inviting me, and especially starting the year. That's important.
Yes, you are our very first speaker of 2024.
Yeah, I feel like I started this week, to be honest. Last week it was still on vacation.
Everybody's like that. Last week, we here in the office, we were already full focused, pero everybody that, I've been reaching out to vendors and different people, and everybody's like, nope, next week, everybody's still on vacation.
Yeah, I was still in the mood, like I have to do this. Wake up. I still
Envidia de la buena.
To do my hair. I'm gonna go today because it's like
no, but it looks pretty.
Into the mood of into the mood of salon. Exactly. Okay. So do we start? Do you want that I do the share screen? And Jennifer?
Yes, you are able to share it. I don't think that you should have any issues. Is this going to be in English or Spanish?
I do any. I don't mind.
Well, I don't see
your
many
slides
people.
are
always my slides are in English. I always like to do it in English.
That's perfect.
So
and then when I do it in Spanish, they are translated. So on that way, I don't have
right.
When I see everybody that is Spanish speaking here right now.
So I do whatever. I always do, as I said, in English, because then it's easy to translate and we have all the information. So in case we have two people, I always have to teach because I teach in Miami-Dade College and I have to teach in both languages.
Both languages.
Exactly. So even though the class is in English.
Yes, that's great. I don't know what you guys choose. Whatever you're comfortable with.
English is fine.
So do like how many one in Spanish, how many one in English? Like the most important is like if everybody speaks, if only one person speaks English, then I have to do it. Usually all depend, but if everybody speaks Spanish, so I do in Spanish, whatever people want.
You decide, English. English is fine.
Perfect. English. Vamos con English.
So, yes, we're trying to keep also honoring the country that has blessed us so much. We have to try to honor that. So take it on.
Yeah.
A ver, Ivania, pues we welcome you. Thank you so much for being our very first speaker of the year. And this month is going to be a little different just because we didn't pick one topic specifically for the month. What we're trying to do for this month is give everyone in the club the essentials for you to have a successful year. So every every class is going to just give you tips on how to be successful in general. So obviously, taxes is definitely something very important for us all because most of us are 1099s. So how do we make this the most profitable for us, where we won't, do anything that's going to harm us in the long run? And that's what we are inviting our dear speaker, Ivania Alvarado, and she's a true professional in the subject. So, Ivania, thank you so much. Y dale, adelante.
Well, to all, I'm a professor in Miami-Dade College. I teach real estate, taxes, property management, like 12 different classes. So you can ask me difference, and I'm being in the field for the real estate for 28 years, and a broker as well for 27 years of my life. And well, I'm here, so I study management and also accounting. So I have a double major and a master in taxation, and I also do the program for doing taxes for free in case any of you need it. It is free if you make less than $62,000 a year. So that is another tool for every realtor who make a little less. You can contact me and I can provide you the information where you can go that is totally free for you. So you can always ask me anything. So common real estate deductions and expenses. So business expenses are the cost carrying on trade or business, and they are usually deductible if the business is operated to make profit. What that means is like, it is not have to be a hobby. Also hobby, we can deduct. But in order to not be a hobby, you have to make money. And the reason is for that. Like, it's not like, oh, okay, I want to make the license, but really you don't want it to work. So you don't have any 1099, how can you deduct? So there are certain criteria. Obviously, we're gonna cover like in general, but everyone has his own things. For principal broker, they can deduct when buy or open a brokerage as a cost for opening a business. Not in the first year, but it has a table, like it could be in 15 years and you split it every year. Like it is treated like when you buy a big equipment and the life of the equipment is, let's say, 7 years, and then you split it in 7 years. In the case of opening a business, is around 15 years, depending the business of. Regarding to deducting business expenses, we're going to talk about commission pay, home office or desk fees, business use of your car, because the car we need it any place we go, education and training, legal and professional fee like accountants, lawyers, licensing, regulation fee, membership like the board of realtor, and insurance, because we don't work for somebody else, so we need to pay our insurance. Self-employment health insurance, the other insurance is the error and omission insurance. Advertising, marketing expense, business tool, and software. Charitable contribution only apply when you do itemized deduction. We're gonna go in deeper a little bit. What is the standard deduction or the itemized deduction? Give to clients or in general, because there are two different type of gift, big ones. There are many, and meals. Many people, sometimes not just in the industry of real estate, got in trouble sometimes when it's related to meals because they have rules. And we're gonna see more in deep there. A commission pay and or payment. Any commission you pay to another agent working in your team, or if you have an assistant, is deductible. Obviously, who pay to the other agent if both when both work is the broker. But it's a way, like sometimes some people give a 1099 before they doing the taxes to another agent or to somebody that you pay. You can pay as a W-2 or you can pay as a 1099. All depend the contract, all depend what they do, and if you want that the person be in your office or in like for a certain time, that is going to define if it's a W-2 or if it's a 1099. The way you
Quick
can
question,
pay,
Ivania, can I interrupt you there
yes,
before I
all
guess
the
we
time.
go to the next slide? That 1099, is there a minimum amount?
No.
Like for example, see, you paid me $200 helping you.
Good question.
Can you give me a 1099?
Okay, let me tell you something. By law, every dollar you make, if you're a 1099, you have to report the person. Me, if I pay to someone, I don't have to do a 1099 if it's less than $600. If it's $600, I have to. I must. But if it's less, I don't have to. But the person is required from $1 and up to report whatever they make. And I'm going to tell you how the IRS think. Imagine somebody do some work here, some work there, some work in different places. And in each place, they have 550. Let's say that person during the year, they go to 10 places. They're not going to report. And the other reason is because there is the self-employment tax that in other slides I'm going to show you, that every person who is a 1099 need to pay self-employment tax. Then I'm going to explain you how much is the percentage. When you work for somebody, you don't have to report or do your taxes if you make less than the standard deduction. Then I'm going to continue what is the standard deduction. If I make, let's say, $13,000 a year, I don't have to do my taxes if I'm a W-2. But if I'm a 1099, I have to report everything. Okay? Everybody understood that? Okay. The way you can pay, as I said, it depends on the contracts and the activity. Obviously, the activity is what I said. Like I can, let's say I hire someone to make some call, but only in the time that the other person had. Then I'm not requiring a person to be from 9 to 5 or from 1 to 5 or whatever. I don't put a set of things. I can hire someone like to help me to like especially in today's day, we have transaction coordinators. You can pay in 1099. So there are a lot. You don't want it to have the bill, and especially you don't want to pay a lot of things like the FICA, the Social Security, the Medicare, unemployment, all of that. So then you contract them by in a 1099. But you cannot require them to do things, but you can require by case. So it is important to know the difference, because then you can be in trouble if you put someone to pay in 1099 when really is an employee. Because the person can, let's say, call the unemployment department or whatever department. They say, oh, but you're making this person to work from 9 to 5, and why you paying 1099? And it is because you want to avoid to pay several taxes that you have to pay. So we have to be very careful. Like if you're gonna pay the 1099, pay by contract. Like, okay, I'm hiring you for this case. I'm hiring you for another case, and not by the time. It's by the case. It's like that. Any question related to that? If not, we proceed. Like home office or desk fee. Agents can deduct their desk fee. If they have a desk, they can deduct. Principal broker can deduct both. They can have multiple offices and several desks in some places. But agent only can deduct or the home office or the desk office. The desk fee is deductible in the real estate office that you pay your license. It's not like, oh, I'm going to have a desk office like in any place. No, it has to be where your license is placed. And if you don't have a desk fee and you have a designated area, yes, you can deduct it because you work from there, you do your calling, you have a lot of things. You're not attending clients there because you only can attend your clients in your broker office, or you can see clients showing property, listing presentation, things like that. But in your house, if you're an agent and you're not a broker, you cannot have people inside because you don't have an office. It's just a place to work. Like, especially in today's day, it's very common to people who work remote. Some career can deduct that. And some careers, their employer providing with extra money for that.
I have a question here. Sorry to interrupt.
Yes, no, I like it. I like it. That's the point.
How do you deduct the home office space? How do you calculate that?
Maria Cristina, because people don't know, and that's a good point. What is the percentage? Let's say I have a house or a condo. Let's say a condo, easy, of 1,000 square feet. And it's a 2-bedroom, let's say. And I live alone, or I live with my couple, with my significant other, or whatever. But I designated one of the bedrooms to be my home office. It's totally closed. It's just for me. So I have to measure the square feet in compare to the home. So in that case, let's say it's 200 square feet. That space, so I have a 20% for the rent that I'm paying or the mortgage that I'm paying. Excellent question. So that's how we decide. Obviously, if somebody lives in Coco Plum or or super expensive house, there is a limit. And it is important that you can Google or talk to your advisor, to tax advisor, how much you can deduct, what is the maximum. Obviously, also depending what is the type of business that you do, because some type of business require you to be more into the luxury than others. If you use part of your home office for business, you may be able to deduct expenses for the business use of your home. These expenses may include the mortgage interest, insurance, utility repair, and depreciation. And to qualify to claim expenses for the business use of your home, you must meet both of the following tests. So it is important. But usually, so what we said, it was a 20% based on that example that I explained. So only 20% apply to all of that bills. So the business part of your home must be used exclusively and regularly for your trade or business. It couldn't have a bed and all of that. So it's not the yin, and also, no, it has to be for that. The business, it's better to have a den than a room that also you sleep there, because it's gonna be disqualified. They call disallow. It means like in case you have for the bad luck that you have an audit and they go and check and they could disallow, and then you have to pay the taxes that you deduct from that and pay them back with fines. Okay. So in addition, an interest for what you didn't pay. The business part of your home must be your principal place of business, a place where you meet clients, in the case that is a broker, in the case that is an agent, no. But it's a place that because our license said you cannot, because you have a broker. So it's dependent, because this applies for every 1099. Or customer in the normal course of your trade of business, but you attend clients over the phone in your office, in your home office. A separate structure not attached to your home, used in connection with your trade of business, in the case that is separate. In the case that is not, it has to be just closed. Business use of your car and standard mile deductions. Sometimes we think that we can deduct everything. I'm going to the office and I think that I can take that as miles. No. When you go to the office, you cannot. When you come back to the office, no. When you go to see your first client, no. When you come back, no. So it is tricky. But if you go to your office and then go and see the client, yes. And see multiple clients in there, yes. So because they call community miles, and they know that you have to go and work and come back. So you have to know that. So that's why is this like for example, this is the home. And if you go to temporary work, yes, it applies. If you go from home to a second job, yes. But if you see, so all depends from home to the regular or main job, never deductible. And to the regular job, to a temporary, yes, always deductible. So it is kind of tricky, but it is important to, like, not all the miles you put to the car is 100% deductible. With the standard auto deduction, every mile you drive for your show, in listing, presentation, and more will help deduct your taxes from your taxes. If you use your car exclusively for your business, you can deduct car expenses. But because they know that you have another car for going out, for shopping, for whatever. But if you only have one car, they know that you put community mile, which is going to other places that is not your work. If you use your car for both business and personal purpose, you must divide your expenses based on an actual mile and generally community expense between your home and your business location. That's what I'm explaining here with this home to the business location. Within the area of your tax home are not deductible. For 2023, the taxes, the IRS standard mile deduction, they increase at 65 to 65.5 cents per mile. It means that if I put 1,000 miles, it's $655 that I can deduct. 14 cents per mile for charity. So when you go and do some event in a charity, yes, you can deduct 14 cents. 22 cents per mile for medical and moving purpose. Let's say I'm moving to another state, to another county, another whatever, so I can deduct 22 cents. If you use a standard mile, you cannot deduct other costs associated with your car, like including the gas, repair, maintenance, insurance, depreciation, licensing fee, tire, car washes, lease payment, towing, or auto clubs do. A standard mile includes these expenses. So however, you can include tolls and parking fee. So you cannot deduct any other expense because you're using the mile, and it's a lot of money. Imagine if it's 10,000 miles, you can reduce your taxes by 6,555 if it's 10,000 miles. But you cannot, but yes, you can include the tolls. So in addition to that, you can put the tolls and the parkings. Like, let's say you pay a monthly fee for a parking in the office that you have, yes, or any other parking that you use it. So business use purpose, for example, business meeting, conference that you go, like if you attend to this and in person, then is that. Driving to a client, business lunch with a client, all of that apply. Driving to post office also to send something to the bank, Home Depot, like supplies, whatever. Medical purpose, because it's 22 miles for medical. Running business related errands. So personal use, which is we cannot deduct, is community between home and the office. Doing personal shopping, going to family events, driving to a cinema or theater or gym or other. So, you know, now if you're going to an event, then you start giving your business card, trying to get clients. Yes, the good thing is realtors, every place we can create a new prospect, clients and everything. So we can put we can find that. Anytime you can let me know if you want to know something else in addition. A mild log for tax purpose can be done by any app. We can use it in QuickBooks, have a good tool for doing that, or in paper. The important is to keep a log in case just we got audit. So you must keep a log of the total miles driven if you choose the standard mile deduction. If you don't, and you go to the other style, then you don't need that. You just need receipt for how much you pay for this or that related to your car. The IRS specify at the start of each trip, record the odometer reading and list the purposes, starting location, ending location, day and trip. So you can do your own log and you just put that lines. That's why I put a little example there to try to cover the minimum things they wanted. Yeah. Also find in Google, like everyone who have the Google map, you go to timelines. So if you go to your phone and go to timeline in maps, then it can tell you where you are. So even through bike to whatever, so it tell you. So I don't know if everybody understand that part. So if everyone grab, let's say your phone and you go to timeline, like, okay, like if you go to Google Map, let's say. Okay, let's see who have Google Map. Oh, I don't see it. Okay, in Google Map, let's go, whoever wanted to make sure how you can find it, go to Google Map. Google Map. No se ve. And then you click in the little ball, which is your name or your initial or your picture. And when you click there, you will find a list of different things. One saying turn on incognito, your profile, and then the other say your timeline. When you click your timeline, then it will tell you today where you have been. So you don't really need to do the log like by yourself, but once a year, once a month, whatever, you go to your timeline. It tells you to every place you've been, how long you was, how many miles, and then you know what is community and what is not. So what that means is that we cannot lie to the IRS, saying that everything I've been showing tons of property when really you didn't even move your car. So that's why it's important to make sure that when you put it accurate, because they can get this information from your phone or from Google. Okay, so that's how it works. So open Google Map app on your Android phone or tablet or iPhone, whatever, tap your profile picture or the first circle and say account, then tap your timeline. So I'm repeating this just to make sure everybody get it. Tap today at the top to find another day. You can go to the left and then you can see other days, other months, your calendar from left and right, you can tap. Okay. Any question related to this app? It is really good because we tend to forget. So that's easy. Has anyone ever used this to make sure your miles or to put the log? Is anyone who's using log?
Look at the comment I wrote. It's a good tool to be toxic, to track your significant other.
It is great because even, oh no, we are not like we have to know, but it's good. Then you find out why he was so long in that place.
Iván, ya no estabas.
Oh my God, technology is about toxic. It is true because it gives toxic also to the IRS to find out where we eat and how much we spend. In every restaurant, they take you and they say, no, I was not there. Oh, really? So education and trainings obviously are deductible, but not training in other things. Let's say you have a 1099 and you make a lot of money in the real estate or even $1, whatever. But then now you're studying other subjects. Let's say, I'm doing a training for being a nurse. You cannot deduct the training for nurse. Oh, I'm doing a training to learn a new language. Yes, it will help you, but all depend if you can put it in the way for the real estate. So, but training related to the career you're making money, you can deduct, and any education. So agents, brokers can deduct every 2 years the continuing education, post-licensing, broker pre-license, more related to real estate. Professional education to maximize your potential in the field of real estate, including your registration fee, related materials, certain travel costs, not including family after the convention. We can go to the convention. Now I'm going to stay another week there or a few more days. Yeah, it's good. You're not going to spend the travel, but you have to separate because then they're going to disallow anyway, and then you will have some fine if they find out. The training and education must be for real estate and not for a different trade or business, as I explained you. It cannot be for accounting, let's say. No, all the classes that I did for accounting is not deductible on my 1099 unless I receive an income related to tax or related. Same thing if you didn't make any money in the real estate and you make 1099 for other things. Yeah. Ordinary and necessary expense paid for the cost of education and training for your employee are also deductible because we want the people who learn and all of that. That's part of having a business. Office supplies and equipment, yes, we can deduct. But some people, they didn't even produce, they didn't even work, and it's all office supply, maybe for other trade of business that they have, or maybe for their children. So just be careful to try to maintain like a decent amount related to what you're making. Expenses related to your real estate business include stamp, photocopies, printer, furniture, fax, machine, computers, telephone, cellular in your own name, anything needed to run your business. Even though, because remember, you are in your own business, that you are an agent, you are an independent contractor. Dedicated line telephone for business can be fully deducted. But your personal cell phone, you can only deduct the business percentage of that expense. We all deduct the cell phone, but really is a percentage. Now, if you have two phones, yes, one is personal and the other is for the business. Many equipment can be depreciated for the same certain number of years. As I said, it could be some 7 years, 5 years. You buy a photocopy, you buy something, and you can deduct it all in the same year or in several years. All depends the law that apply, the code regulation that you apply for that type of equipment. So there are certain code regulations that the IRS allow you to, in a lump sum of what you spend, you can deduct it, and other they don't allow you. So it has some criteria in order to deduct the same year. Legal and professional fees. So fee charged by an accountant, let's say I do the 1040 for somebody, the taxes, yes, you can deduct it. Attorney's fee related to the business. Know that you went and I'm going to do a will, or I'm going to do my divorce, or whatever thing. No. Unnecessary expenses directly related to operate your business are deductible as a business expense. So I can go and ask for a lawyer, like to draft a contract that I'm going to rent. Let's say that I'm opening my brokerage, and then yes, that draft, let's say I did a contract for 5 years. So whatever he charged me, I have to deduct it in 5 years. I split, let's say the lawyer charged me $1,000. I only can deduct $200 every year. So because the lease was for 5 years, there are certain rules that is good to know, because if you put it in a lump sum, it could be fine, a fine. So then you have to pay it back. Legal fee you can pay to acquire business asset usually aren't deductible, but if you buy in the same year, it might be deductible based on the contract. Fee that include payment for work of a personal nature, such as drafting a will, are not allowed as a business deduction on a Schedule C form 1040. 1040 is the form that we all use to do our taxes. Tax preparation fee, I already mentioned. The cost of hiring a tax professional, such as certified CPA, to prepare the part of your tax return related to your business as a sole proprietorship is deductible. Or LLC, like some agents wants to have an LLC or PA, S Corp. Yes, you can deduct that. You can deduct the expenses of preparing tax schedule relating to rental property on a Schedule E, because it's related to the business, is real estate. So now we have licenses. So related to licenses, so we have regulation fee and membership and insurance. So the error and omission insurance. So every annual fee that we do with the Board of Realtors is 100% deductible. Also for brokers, the business insurance for their real estate firm, and for the agents, the broker and omission, also you can deduct real estate taxes necessary for your business. Like some people have their own building, shopping, or office that they have a warehouse and they have the real estate there. Yes, you can deduct this. And self-employee individual receive an income tax deduction for half of self-employment taxes. So the deduction is claimed as the above the line deduction is computing adjusted gross income. The taxpayer does not need to itemize deduction to claim the deduction. So you can deduct this part of your business if you're a self-employed. Okay, self-employed health insurance deduction, we also can pay. So if your spouse are not eligible for an employer-sponsored health plan, you can deduct your health insurance premium. So, but let's say your husband is in the military or in the firefighter or teacher or whatever, and they allow to put the spouse there for no extra or very little, then it's different. That's what they mean. The health insurance can cover your child who was under age 27 at the end of 2023. So because the insurance in the health family plan, it go up to 26. So it has to be it has to have less than 27. Child include your son, daughter, stepchild, adopted child, and foster child. Business tool and software. So our computer, software that we bought it, like CRM, QuickBooks that we want to run our business better, different expenses related to that. Yes, as long as we use it, even though that is expensive, some are more than others, you can use it. Let's say you bought the QuickBooks, you also can have different other companies, but in QuickBooks, if you have it online, it's only one per business. If you buy the desktop, you can have as many companies inside your desktop. Meals. Some people got in trouble with meals, not only realtors. Many people as a self-employed, because it is hard, like sometimes, because they only pay now, we go back to the 50%. And in 2021, and 2022, they was giving 100% for the COVID relief, but not anymore. It go back to always as it was, that it was 50%. When you're traveling on business for getting a listing, buyer, etc., or for training education purpose, but you're traveling far from your home, yes, is in that you can deduct it. And then dining with client or with other professionals. When you're dining with clients or with other professionals for the purpose of conducting business or generating referral, yes, we can put it. But it's only 50%. It went back January 1st, 2023. The temporary incentive have expired. And now the rule go back to the 50% deduction for more business meal. So most business meal, it means like in some cases, it could be 100%. But it has to be like a business that do some type of event to everyone or a charity or things like that. Yes, you can deduct certain things. But if you go just with one client or with other coworkers to try to do some alliance or whatever, it's only 50%. Advertising and marketing expenses. So obviously, yeah, we can deduct everything. And it's very expensive doing advertisement. We can hire people and then we can pay a 1099, or it's a company, then we don't have to worry about giving the 1099 to these people, because if it's under a company, we don't need to provide the 1099. Agents can generally deduct reasonable advertising expense that are directly related to real estate business activities, such as marketing material, staging, photography, signee, can all be deductible through the Internal Revenue Service advertising expense deduction. What can it be? Like if I do advertising, but at the same time I'm advertising several companies, then you have to prorate. Like if I'm advertising and I'm paying advertisement for, let's say, 2 different companies, even though they're related. Let's say somebody have a mortgage company and a real estate company, and they do the advertising, the marketing, it has to be split 50-50. But if you advertising just the real estate, then you can deduct 100%. Otherwise, it's commingling, and then some people put more in one company than the other one, because in one it's making more than the other one, but it has to be based on the percentage that you're using for that business. Now, if you have a set and you took very little for one and more for the other, is prorated to the amount of work in each one. Any marketing material with the logo of your company or your name as a real estate agent to promote your business is tax deductible. I could have many hat, pencil, t-shirt, whatever I wanted to be creative in order to promote my business. Yes, I can use it. Questions up to here? Now we are in gift. Gift is another thing. We cannot give more than $25 to our clients. It's not like, oh, somebody referred me a client and I wanted to give a Gucci. No, I wanted to give $100. No, it has to be $25 maximum. Obviously, $4 is the wrapping cost. Whatever you spend more than the $4 in wrapping or in the gift, let's say it costs 30, you only can deduct $25. So, and if the wrapping costs 10, because some wrapping are more expensive than other, then only can deduct that. So if you give business gift in the course of your trade or business, you can deduct all or part of the cost subject to the following limitation. That's why you can deduct all if it's 25 each one. That's why I put a lot of little ones here, but really, or part, because if the gift is a little more expensive. The cost of business gift you directly, so you deduct no more than 25 of the cost of business gift you give directly or indirectly to each person during your tax year. If you and your spouse both give gifts to the same person, both of you are treated as one taxpayer. Imagine, they don't allow you to be 50. It's both are giving, it's only 25, no matter if it's one or two, single or joint. For purpose of the 25 per person limit, don't consider the gift costing, which is the $4 that I was explaining, or less that have your business name, or less that have your business name permanently engraved on the item and which you distribute on a regular basis. Also, they have some things that in addition is like let's say you give for free the pencils, it cannot cost more than $4. But if it costs, then you're covering that expenses. Yeah. Any item that could be considered either a gift or entertainment is generally considered entertainment and cannot be deducted. You need to have record that prove the business purpose of that gift, as well as the detail of the amount expense. Have anyone have experience related or put anyone in their 1040 doing the taxes gift or meals? Is any one of you deduct meals? Do you like to put gift meals in your expenses? Do you know that doing all of this can help you? Have you ever used, Jennifer?
I'm sorry.
Have you ever used?
I'm sorry.
No te preocupes. Have you ever used? Do you, Maria Cristina? Have you ever put in your 1040?
Yes, but especially when you go out with clients.
Exactly. Yes.
Definitely. If you're taking a client out, most definitely I've used it for many years.
Exactly. And it's good
if you're going to Orlando, to Tampa, to wherever you're going, or of course, when you travel internationally, 100%, you're like hotel expenses, all the meals that you have with the clients. Yes. And it's a big amount when you take a look at it, because most of the times when you're with the clients, you usually stop for a coffee or for lunch or for dinner, whatnot. And it's, you add them up and it's a great deduction.
It is a great
I think it's important because I struggle with that, with keeping the receipts or después you'll add them to your Excel, whatever the situation is later. We always forget later, we lose the receipts. But I know that there's definitely apps for that. There's apps that you can just take the picture and then just keep everything in order.
Yeah,
that's definitely one of my goals for this year.
Yeah.
I need to keep myself more organized when it comes to receipts.
Exactly. But if you see, you can simplify the receipt. Like, why don't you get, I'm not saying you as Jenny, like any one of us, get better just one credit card that give you cash back, that we only use it for the purpose of meals and business. Let's say I'm going to use for supply, for the gift that I buy for the client, for inviting when I'm talking to a client, or even when we do collaboration between others agents to try to see if we can sell something together. Or I do an open house and I buy some things in the open house, like wine and cheese, let's say, or something like that.
True.
And then you don't have to worry. Otherwise, whoever has QuickBooks, they have the app and you just took the picture and that's it. But it's easier when you do it through any of your bank accounts as well, because for example, in QuickBooks, you just have to have linked all your bank accounts that is related to your real estate, let's say the personal, let's say other that you use for that. And then you have it there. You don't have to worry because when you link the account, is automatically you see it every day, every time you open your QuickBooks, and you can do it through your phone. So, but if you don't have QuickBooks, because you have to pay a monthly fee, well, the best thing is to have a credit card or a debit card if you don't want to go further of your expenses, and then you have it at least 7 years.
I see here in the comments, Madeline, hi, thank you for putting your notes. She says she loves to deduct the meals, but her question is, do you need to keep the record of the meals?
Well, yes, if you pay cash, but if you pay in credit card or debit card, you will have this statement anyway, and then you just have to keep it. And anyway, it's better to do it through your bank because you have a 7 years. So yes, it is important because you never know when it could have an issue, because there are many ways that we can be audited. Number one, audit our self-employers because they know that we deduct a lot of things. Okay. If somebody's a W-2 and somebody's a 1099, we have more chances because they know we have to have all of that. And a W-2, they don't need that. So that's why it is really definitely important. I'm going to read here some chat. So Jennifer, Maria, enviando la presentación. Okay, deja ver si if somebody else, yeah, Madeline, I love to deduct meal. Yeah, okay, yes, it's everything good here. So do and deduct the meal. Sometimes I go out with some friends, realtors, and also collaborating, and I don't deduct it. I forgot, and we were talking about business, and maybe it comes to business through there, and we forgot sometimes. So, but the IRS is not sad for that. But yeah, we have to make sure we put everything because we pay a lot. We pay more than a W-2 based on the net, not in the gross. So we're gonna. And if somebody need an explanation, I could explain. So do you know that W-2 pay for the gross and the self-employment we pay for the net? Everybody knows what is the difference into that? If somebody wants to know, I will tell you. If not, I continue. Okay, perfect. Oh, somebody here. What we buy to open house, okay, is tax deductible. Well, almost everything, to be honest, unless it's not related to that. Like if I'm going to have signs, balloons, or anything I put to the people, marketing material, basically all, because you're promoting. So yeah, obviously, if you're going to buy a gift for no, but everything related to that is 100% deductible. Okay, thank you for the participation, Madeline, and to everyone. Okay, donations is another thing. So related to donation, charitable contribution. Cash payment to an organization, charitable or otherwise, may be deductible as a business expense if the payment are in charitable contribution or gift and are directly related to your business are not. So what that mean? If I donate to the church and I don't receive nothing in exchange, then it's deductible. But if I donate, let's say but then let's say not donate, but that they have a newsletter and in the church and I put my name as a realtor, whatever I pay there is not a charitable, it is a marketing. So we have to separate everything. Another example, you pay $15 to a local church for a half page, that's what I say, ad in a program for a concert. It is sponsoring. The purpose of the ad was to encourage reader to buy your product. So your payment isn't charitable contribution, you can deduct it as an advertisement. So same thing. But also whatever is not cash, you can deduct up to $250 in every year for 2023. But if it is that you give a lot of money, if you use a standard deduction, you cannot deduct the charity. But if you use itemized deduction, yes, you can deduct every penny you donate as long as it qualifies the organization as a charity contribution. Did everybody know what is the difference between the standard deduction and the itemized deduction? Just because I mentioned, and I don't want it to, people don't understand what I say. Madeline, you say, do we need to record of the donation if you're gonna put it in your taxes? Yes. If you're not gonna put it, no. Somebody said something. If you donate monthly, it's deductible only if you're gonna use the itemized deduction. But if you use a standard deduction in your taxes, you cannot deduct anything from charity. Okay, the standard deduction looks like everybody knows what it is because no one asks. So the standard deduction we're gonna see in few slides. Okay. So this is the Schedule C. Maybe it didn't see well because it's big. Let's see if I can everybody see better a little bit?
Yes.
Because I tried to open. So everybody knows what is the Schedule C. We all need to have it because that's where we put all our expenses. So, and I'm giving a class of accounting or taxes, but it's good to know because if you go to tax preparer, maybe they're not maximizing your after tax. It means like the money that you will keep it. And there are certain expenses that we can put it. So there, this is the part one, the part of income, and in part two is what is more related to you, like the advertisement, car and trucks expense, all the other things that you use it for putting that you can deduct, okay? So, and in the other part, so is the cost of goods sold, let's say, that's mostly for the case of Jennifer. Let's say Jenny has to buy the t-shirt and the hats that she resell when she has some events. So that's a cost of goods sold because she purchased, let's say for your business that you have, that you sell marketing, but t-shirts and different other products, you have to buy it and then you resell. The cost of goods sold is how much you pay. And then, but anyway, so here you put other expenses that it wasn't there. And here are the part for your vehicle. So based on how much, you put it, they ask you some question to make sure that you're using the vehicle 100% for this, what percentage, what is the business that you're using for the whole car and the community, and what it costs is, what it's gonna count is the business. Okay, so se rayó ahí. Question related to 1040s. Okay, thank you. So what is the standard deduction? I was talking about that. So for 2023, for a person that is a single or married filing separate, is $13,850. Then I will tell you why it's so important. For married filing joining return or qualified surviving spouse with dependent child, is 27,700. And head of household is 20,800. So it's married, filing, joining, or qualifying surviving spouse means a widow with a dependent child. So why this is important? Because if, let's say, let me put this slide. Jennifer, I'm talking to Jennifer all the time. She made $50,000 net, no gross, because the gross is first you make this amount, and then you create your Schedule C, and then the net is after all your expenses. And let's say the net is $50,000. From that $50,000, you're not gonna pay taxes for $50,000. If she is head of household, because she has 2 daughters, but one already married, so she can deduct 20,800. So instead of she paying 50,000, now she's gonna pay 29,200, and then she will pay taxes for 29,200. That's the standard deduction. If she was married, then she has to deduct 27,700. Then she will have to pay like 23,000, 22,300, something like that. I don't have a calculator, but I'm trying to put the numbers. And then you pay taxes based on that. So the standard deduction is really great because we don't pay federal taxes for that. That's the table that is starting 10%, 15%, and they go up to 37, 39%. That we pay taxes based on a scale of income. So, but what happens if you choose the standard deduction? Then you cannot deduct the charity, and you cannot deduct the mortgage interest and the taxes of your property. But if, and that's a key factor, because you might go to a tax preparer and it's easy for them to do the standard deduction because it's less work to do for a tax preparer, because it's easy. I just put the standard deduction and that's it. And I don't have to worry that you give me your 1099, 1098 for the mortgage, or the interest, the taxes, and the charity, and all the other things that I can deduct, even the health, even all the expenses that I pay for the co-payment, for insurance, my medication, and all of that. They're not gonna put it. So it's less work for the tax preparer. They will charge you, maybe the same, maybe less, all depend. So, but if you have a mortgage of a $500,000 and you paying $4,000, let's say, in mortgage, and from there 3,500 are interest, then you are paying like 40,000 in interest. If you see, then it is a killing. It'll kill you, your tax preparer, to use the standard deduction, because it's better to use the itemized, because you can deduct from the 50,000, the 40,000 that you're paying in interest, and now you only have to pay for 10,000. Do you see the difference, Jenny? What do you prefer to pay? 29,000?
Of course, the itemized is better. Now, let me ask you then, what you're saying is like when you're going to speak with your accountant and the preparer, that person, we need to ask them and make sure that we're having open communication conversation where it's like, hey, don't do it under the standard deduction. I would like this instead. Because maybe they'll automatically just do it under the standard.
They automatically do it when they don't have experience, or when they are charging very little, or when they don't care because they have tons of people. But that's the importance of knowledge. When you don't have to be your preparer, but you have to know a few things that are good for realtors, good for self-employers, that will help us to pay less. That's what it's called, and it's totally legal. It's illegal to try to cut the IRS not paying taxes, but it's legal to find the best way to maximize your after tax, the money that you put in the pocket. So the knowledge is power, and then you know that you have to come with different other things. But this didn't apply to everyone, because if you don't have a mortgage, then you have to go to standard deduction. But if you have a mortgage, but what about the mortgage? For some people, they want to do that, but they are people who already finished their house or they have a mortgage very little. And the mortgage they paying interest maybe $5,000 a year because they bought the house 25 years ago. Okay, then it go to the standard deduction. Every case.
So it's great that you have the option, one or the other, so you're not stuck with just that one. So in most cases, you know, some people don't have a mortgage; they're just renting. So when they take on the standard deduction, and then now they have a net of, you were giving the example of me. Let's say if it was 50,000 minus the 20,000, now we have 29,200. That amount, now you go into an itemized of the miles and everything else?
Or one or the other one. If you use the standard, you cannot use this itemized. You have the choice to do every year, the decision. But how you know what is better for you? Easy. If you have a house and you pay a lot in interest, bingo. You don't even need to go to the standard. If you don't have a house, but maybe you was very sick, you want somebody else in your family that, let's say, husband and wife and a child, and they have a big back hobby, let's say, and they spend 30, 40,000 in medical bills. And even though that they don't have a house, they can deduct that. And then they go by itemized deduction. So all depends. How you know, before you go to the accountant, January is the best day because at the end of January, we start doing taxes, our personal taxes. So before that, count everything that, including itemized deductions. And if you have more than this table, then you can go itemized. But if you have less than 20,000, in the case of someone is a head of household, don't even bother. Okay? Let's say if you have 30,000 rather than 20, yes. But if you have 21 rather than 2,800, go standard. It's easier. Okay? So just do the calculation, medical, charity, the mortgage interest, the taxes of the property, no investment properties, not including investment property, because investment property go in the property, on the property, okay? So in addition, we have here, don't use chart if the taxpayer was born before January 2nd, 1959, because this person is retired and they have a higher standard deduction. Or if it's blind, or if someone can claim the taxpayer as a dependent, or their spouse is married, filing jointly. So that is an exemption because they have other chart. The self-employment tax rate, I don't know if you know, is 15.3% of the net earning in 2023. So it means, like, if in your case that I was giving to you, Jenny, that you ended paying 29,200, from that amount that is the net, you have to pay 15.3. Let's say for every $1,000, you have to pay $153. So every 10,000, you have to pay 1,503, but 1,503, 5,000, whatever. Okay, so from the net, but let me explain. Does not include the federal income tax. That's just the self-employment taxes. Some people tend to think that, oh no, that's my only bracket. No, it is this plus the federal income tax. So when a person, let's say, make 20,000 and the head of household, the net is 20,800, bingo. She doesn't have to pay federal income tax, but yes, it has to pay self-employment taxes. It's two different things. I don't know if everybody understood that part, because this rate is the sum of a 12.4, which is the Social Security tax, because we're all going to retire, and they have to take it. They have a cap, the Social Security, in 140 something, 150,000 this year. Then after that, you don't pay the 12.4, but then yes, you have to pay the Medicare tax or net earning of 2.9%. So the combination is that. people with W-2, they pay half of that, which is 7.65. Okay, so a taxpayer, ¿qué me escribiste? Perdón, deja ver que alguien me escribió. Ya nos pasamos 10 minutos. No es
Yo
hasta
le
las
escribí que
11:30.
ya nos pasamos del tiempo.
Tú me dijiste 11:30, me escribiste.
Ah, pues, ok.
Por eso yo iba
Pero es hasta
lento.
las 11. Pero bueno, ¿tienen preguntas? ¿Cómo vamos hasta ahora?
Ok, porque creo que tú escribiste aquí, Jenny, 11:30.
Ah, imagínate, me emocioné.
Ok,
Bueno,
voy a ir
vamos.
rápido. O si no, lo
Rapidito.
dejamos allí y nos queda para otra clase. Así que todos decidan lo que quieren.
How are you guys feeling so far? ¿Cómo se sienten hasta ahora? ¿Tienen preguntas? Están calladitos. ¿Cuántos slides nos faltan, Ivania?
Lo puse en una manera que no lo veo. Ok, Madeline, te tenías que ir, no importa. I'm okay to keep going, Victoria. Ok, so next time ponme de 10 a 11, porque me pusiste de 10 a 11 y
Sorry.
media, y yo he
Antes lo hacemos a
pasado
las
de que he
10:30,
terminado
pero
3
ya,
clases
una hora.
en 1 hora y me dicen, no, tiene que ser hasta las 10:30. Entonces yo voy
Bueno,
lento.
wrap it up.
Ok, so hago lo que quieran. ¿Quieren que siga o quieren que pare? No importa, nos queda para
Cristina,
otro
¿qué tú
día.
piensas? Cristina.
I have to get out within the next 15 minutes.
Okay.
So,
Yeah, that's what I'm saying. So,
and if we can just probably expedite it, you know, a little.
Okay, I'm going to
I would think
expedite.
that we
Okay.
can just cover it
So,
within the next 10 minutes and
perfect.
then.
Let's go to expedite. So this part we already covered that it was the $600 that you mentioned, so that we're not required to do it, but people have to do it. So it was the last one.
Buenísimo, perfecto, perfecto.
So
Bueno.
thank you everyone. I'm Ivania Alvarado, and also author for several books, and 3 of them are for real estate. One is the Fearless Agent, the Productive Agent, and the Real Estate Action Planner. I also am the owner of South Florida School of Real Estate. For this February 2nd, I'm gonna be 25 years with the school. Thank you.
Yes, congratulations.
Tenemos que hacer un celebratory dinner.
Yeah, the 25
Yes.
years. And
you
I
know, that's
also
very interesting that you have the planner, the real estate action planner. Maybe we can do a different class with you to go over that, you know, how to plan your days.
Yes, excellent. Yes, I could do that. And I also own logs, tax, and accounting because of the background that I have. And yeah. Okay,
That's amazing. Thank you, Ivania. Bueno, si cualquiera necesita help with their taxes, Ivania can definitely help us. Y Ivania, si nos pasa la información, you said something about if somebody made less than I think 60,000, right?
I mentioned that.
The PowerPoint.
You can type beta. I'm going to type here just because the number you can get it online, beta. I put the word beta. When you put in Google, beta is tax tax preparation, tax preparation.
And if you don't mind sending this PowerPoint presentation,
Beta program. Beta program around my area or near me.
Perfecto.
Near me.
Ivania, si nos
You just
compartes la
have to
presentación.
type that, and then you find a list in your area. You have to call because they usually do like only by appointment. Okay.
Perfect.
Sorry, I didn't know that it was a
No, sorry. I was my miscommunication. Mira, igual nos pasas la presentación porque sí hay algunas personas aquí que preguntaron que cuáles son los, if we have an itemized list, an actual checklist, para compartir con ellos.
I do consulting as well, that people can call me and then I advise them, even if they have their own tax preparer, I advise them how to organize their thing before they go and do it with the same people they do. Even some people have a TurboTax and they do it, but they don't know how to put everything together. So I also do advising.
Super. Thank you, Ivania. Un abracito.
Thank you
Gracias
so
por posting my
much.
phone. Have a good day. God bless you,
Thank
everyone.
you.
Ciao, ciao.
We'll see you next Wednesday, members, and we will let you know this week. We already have the date for the in-person training. It's gonna be on the 22nd. So mark it down so you guys can have with me the second part of the class of how to program your goals in person on the 22nd. So we'll let you know the link so you guys can register. Okay?
Thank you.
You're
Thank you.
welcome.
Bye, guys.
Bye. Happy New Year.
You as
Bye-bye.
well.
Happy New Year. Thank
Bye.
you.